Good afternoon. Welcome to OptionsTender. It's Monday, February 3rd, 2025. So we're rejecting off of those highs once again. We didn't make a new all-time high last week, but still rejecting off those highs. The big question we have to answer is price going to break above these historic trend lines from 2008 and 1929? Or are they going to break down from there? Clearly, I've been talking about probability is to the downside because of this level. And if you're a trader, you just trade off of levels anyway. It doesn't matter if you're bullish or bearish. If there's a level above you and you want to trade under it, go for it. Because if price gets above it, you get out. Okay? Same with the opposite. If there's a level below you and you're bullish on this, trade. If that level breaks, get out of your position. That's how this works. Okay, so we're going to go through SPX just on the big picture here just for a second, and then we'll go through multiple time frames on SPY, and then go around the horn on the, this is the typical analysis that we do here, go around the horn on the 65-minute. And we're doing this intraday about noon Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube member. If you want to get these intraday and you want to receive the individual analysis videos, this is on YouTube, not on Patreon. I really appreciate all the Patreon members, but you guys only get the Discord and the trade alerts. So come on over to YouTube. It's cheaper. It's half the price. 99 cents is the start per month. $4.99 is the top tier there each month. So let's dive into it. We have SPX on the monthly time frame, 1929 top, 2000 top, in confluence with this 2008 top, 2021 top. And we're starting to get the rejection off of here. Clearly, we're still inside the monthly range from last month, but we're just getting started. Let's see if we eke out some new highs here, break above this trend line, or do we break below the 8 EMA and continue lower to consolidation areas where there's support a little bit lower. Now, let's go over to SPY so we can, and we do SPY on this channel because most people trade SPY, okay? And so it's easier to translate for those who do that. And on the 65, we'll do the futures and also SPX. So looking at the monthly candle, we're just mid-range here. We'll see what happens if there's any follow through to the downside or to the upside. We are in a bullish stance. We've been in a bullish stance. And I'm talking the charts, not my mind frame. When we get up here, I mean, that's to me, it's inevitable we go to the downside. But we always have to leave consideration for the market doing things that hurt the most people, hurt the most traders. So notice over here, we had this good support level, and then price took 3 months to get a large reaction off of there. Okay, 1, 2, 3 months. We're in the 4th month. So let's see what happens with this month. Now there's negative divergence on the MACD and the RSI and all these things on multiple time frames on the SQQQ, or excuse me, and QQQ and SPY. So we're not going to go through all those. We do have the big picture video that I'll link above and at the end of the video. So let's go to the weekly time frame. On the weekly, you see where we came into the 20-week moving average. Super important. We held on to there. We're getting a reaction, and now we are pinching between this 8 EMA and the 20-week moving average. I think this bounce is almost or is over. I think we break to the downside from this point. But we got our rejection from the top here. Tested back up here, didn't make a new high, but rejected again, and now we're pinched between two moving averages. The 20 moving average on the weekly is going to be so important. If price breaks down from here, then we'll be looking for move, and we'll show those levels coming up. But we'll look for a move, and then we'll look for a back test, which they call the kiss of death for the 20 moving average. Now, clearly, if price breaks below and comes back above and holds, that's going to be bullish, okay? But when and if it breaks underneath, back tests it, kiss of death, then we're looking for a much larger move to the downside, okay? So moving on to another weekly board here. I think our high is in. We had time and price on this weekly time frame, and we closed that. Now we're into the 2-3. We're in another cluster here, right? So where does this go? 2-3 is here today, but we have a little bit more, and this is, I think, more the important cluster is towards the middle of the month. So you have let's see if we can zoom in here and see. So you have 210 all the way to the 218. Okay. So I think 218 is going to be a real important number. But let's see if we get some sort of low in here. And by the way, these are the week of, okay? The week of these lines, not the day. All right, so again, let's see where we go. If we're lower into these time frames, then that's possibly a good support or resistance on where we are. Okay, and we'll look for some sort of at least reversal for a minor bounce. Let's go over to the daily. And by the way, our first point that we've constantly talked about is this 560 zone where we had the breakout. Okay, and that's a zone all the way from 555. You have the I'm highlighting this blue 50-week moving average that comes in at about 556. So keep that in mind when we're looking at some of these targets. On the daily time frame, we had the bearish rising wedge that formed, and so this is the trend line as we expanded the wedge. Here's the trend line that's going to be super important, right? So price has really just gone sideways since the election. After the election, although we have an expanded move here, we've been going sideways for 3 entire months. All right, now they've been huge moves, some more lucrative than others, especially on the downside, right? Because we've been bearish. But same thing is happening. We're just in a range, and this range is eventually going to break down or break out, okay? So after price gap down, after rejection up here, I think we're starting to form some structure, and I'm going to show you the bullish and bearish point of view. All right, so we hedged here on the low to the upside just in case this is a setup to the upside, and clearly we have our swings out past the 18th of February because we have that cluster there to see if we can get some lows in. So will that low be around this 565? This is going to be such a big area on this daily time frame. You can see we had a consolidation here, consolidation here. So we have this zone. It's also the 200 moving average. This zone ranged from 555 to 565. So at the top of the zone, you have this megaphone bottom. All right, that's a big enough move for us, but it's likely if we start to get this momentum and the trend line breaks, that we'll start to we'll either wick or get down to the 200 moving average, and possibly even as low as the 555. That would be good support there. Okay, so that's why we're calling this a zone. Changing the boards. Trend is our friend. So with the top being in our point of view, I added on some more time and price relationships, and just quickly on each time frame you have a major low and major highs, and that's where we take these the Fibonacci ratios, time ratios, and take it from bottom to get a high, or bottom to high to get a high, and likewise on the other way around. Okay, so even on the 65, we do it on the monthly as well, but takes so much time to get to them points. So, all right, breaking down, we're underneath the 50 and the 20, and we're having trouble getting back above there. So the momentum's curling over. The 8 EMA is our momentum indicator. The 20 is our trend. And so we're underneath them all. All right, at this point, there's no sense in being bullish at all until price proves itself and with some market structure on the lower time frame. Okay, so right now it's there's two ways that we can look at this, and I'll do just briefly here on this time frame. And we do have this, I think, moved to the top here. So we're looking at the 50% retracement being the key point, and that's where that middle of the range where the 200 moving average is. So I think this is going to be the very important area where we kind of neutralize our positions and look for more of a bigger rip your face off rally, because I think the market right now is in a lower time frame, looking at this being a 1 and then a 2 pullback and then 3, 4, 5 to the upside, right? If this breaks down from this point, from that trend line, right underneath at the 590, 588 being the lower part, also this gap here. So if we start to break down from there, I think the market will start to look at this as an A, a B, and then a C wave move down here where this is an impulse wave to the downside. And that will be corrective to the bulls. And you get new highs after that. To me, the high is in. This is a 1, 2, 3. We're going to get our impulse wave to the downside, 5 wave move, just like the bears, and just like the bulls, either way. And then after that, we get a rip your face off rally, and we fail. Dead cat bounce. All right. So this arrow, again, I just keep it there just in reference of if this was like 2000, for example, this move would just be 16 trading days, something like that. And then, all in one swoop, 14 trading days. But they were huge swings back and forth. They were so devastating. So we'll see what occurs here. Okay, time and price coming in. Looks like here we're looking at 2.5. So around 2.5, and then later on about 2.20. So that matches up with the weekly time frame. And then maybe we get a low around a couple days from now. Okay. And or a high, right? So I don't want to leave that out. Maybe we get a bounce higher or even highs, and then we look for another reversal in this cluster. Okay. I know I'm biased to the downside, so I want to make sure I say what the bulls are looking for, just in case you don't agree with my view. And I know there's a lot of people that do not. Let's go to the 65. Here's the bottom of that wedge. You see price poke through there, and it had a big move. That's a false break. Had a big move to the upside, made new all-time highs in one single wedge there. And so now what's happening is we're breaking down that wedge. Then we had a megaphone type bear flag pattern, expanding pattern, and dropped from there. Now we're back testing, had this gap down, huge gap down. We're back testing this 599 area, which is pretty important. And notice that that's where the options expected move was. So I had just a rip your face off rally, like within minutes, we retraced more than 40% of this initial move. That's huge. So we took off some of the hedges, and then we'll add on clearly if price closes a little bit lower here, just to be on the safe side. And also, just as a market psychology, after you hit the options expected move, it's not likely that you go all the way back to the other side of the options expected move. It does happen, but it's rare. And I don't think this is a likely situation now that we've been down here. I think we either, pause for the rest of a week, which I doubt's happening with this type of volatility, or we end up breaking below the options expected move and hedging starts to happen from the big boys. and price accelerates. It's called a gamma squeeze to the downside or the upside, doesn't matter. All right, now where's price going to go? We have this move here. Now, like I said, this is a 1-2 and wave 3. They're going to be so volatile. So I think this is going to rip to the downside faster going on into tomorrow. Turn around Tuesday. I don't know if that's going to happen. So we'll see. But I think price ultimately, after you get this 5-wave move down, comes down to this green box area that we just talked about where those consolidations happen. And it's the bottom of the megaphone. So I could see that happening. That's a good 7% move from the top there. No small move. And it just so happens that that trend line right here, the dashed one, is from 2000 reaching to the top of 2021. So it's a little bit of a more, I want to say like horizontal type move. But you can see from 2000 comes all the way up here, and it just kind of, I'd say it's more of a pivot than anything, and it just so happens to be right in our zone where we're at. Okay, so that just adds to the confluence there. Let's change boards. All right, now what will this look like for the bulls and the bears? Like I said, this is such an important area right now that we had this hefty move to the upside after gapping down from news over the weekend. We're at this 50%, and the Qs are at the 62%. And so that's technically a 1-2 setup here. And so if this holds, this will be your impulse wave 1. And then you have your A, B, C flat pattern for wave 2, and you go up for wave 3. And we're going to break those 1929, 2008 trend lines to the upside, and we're going to get on top of those. Okay. So a trader asked me in the Discord, when am I going to stop using hedges, calls as hedges, and turn around and your major positions be calls? I said, not until we get above those trend lines that we talked about, this historic trend lines. Okay, we're fighting against them right now, and we keep breaking down from that point. And I think that's an objective short every single time. You get price above there and they hold on there, then I think this wave 3 is in action. We'll have some targets to the upside from that point. Now, if we break down from this zone that we're talking about, now this kind of changes things a little bit for the bulls. I think things started to break down. You have this trend line that I was talking about on the daily, and we start to break down to here. Now, this is what I'm putting out there right now. And so we have the, in purple, from the top, all-time high, wave 1, wave 2, we're in wave 3, and that possibly stops or gets a reaction at the 582 because that's an extension. Okay, that's the extension from 1 to 2, and all the way down here to 583. Now, if that happens, I think this is more of an expanding move, meaning momentum is increasing as a wave count happens. So we get a 3, a 4, and then we should get an extended 5, where we get a 5-wave move down here, and it reaches the targets. Okay, so you see how your wave 1 is the shortest, then you get a 2, and a 3 gets bigger, and possibly 4 is just I don't have an answer on how big 4 can be, because this could be some sort of leading diagonal at some point. You can cross over wave 1, but it's just more probable that wave 4 would be a sideways, shorter move, because you see how steep this wave 2 was. Well, wave 4, the rule of alternation, it should be a shallow bounce here, and then we get wave 5 that extends and is the longest wave of all of them. All right, which is a lot more common in like commodities, but it does happen here on the indices. Okay, so that's where you have the bulls and the bears both looking at the same thing, and you're both looking for a bounce, but you're looking for the bulls to continue to the upside. This nice steep rip your face off rally, which will definitely be in all calls at some point here. then we'll put on some put protection, looking for a turn again as the bears to get a larger wave 1, larger wave 2, and 3 much lower. And for the bulls, like I said, we're looking for new all-time highs, and that this was just an A. If you see in the turquoise, A, B, 5-wave move down for C. So both bulls and bears, if we break this zone here, that 590 zone, then both the bulls and the bears are looking for the same thing after that. All right? And those are the easiest ones to trade at that point. Qs. Going to the Qs, really the same thing. Really, we're looking, this megaphone is descending, so it's a little bit weaker than the rest of the market. And we're looking for the bottom of the range and actually to break down even lower. So I think it'd be more appropriate for me to take the lows of each of these, just like I did for SPY. All right, and that makes more sense here, because then if this starts to break down, we get to 1, 2, and then we get 1, 2, 3, 4, 5. And so the difference is with the Qs, we didn't make that all-time high right here, okay? So that's why it's going to be easier to say this is a bullish situation, and we get an A, a lower high, B, and then a 1, 2, 3, 4, and 5 into this bounce zone here. Okay, so that's where I think we're going. I think we're going around 480 on this move, and 500. That's an easy bounce spot. So wave 3 could end down there. So we could measure this out. And so if I'm looking at this as being a 1, 2, and then 1, 2, and then everything kind of levels itself off after wave 4 and 5 happen, where you can make the accounts match into the SPY and QQQ. Hope that makes sense, because they will eventually converge. Okay, clean this up. Like I said, if you're a bull at this point, you want this to hold, and you're looking for a 1, 2 setup, and this is another 1, 2, and you're looking for higher prices. So I think it'd be really easy to test this one out. If we break out from that downtrend, I think it's likely that this is a wave 3 and it's a bullish price action happening. At this point, you're underneath all those moving averages on the daily time frame and such. And so I think we get R1. So wave 2 top here. And now we're into a 1, 2. And wave 3 is likely to be measured at, got a little steeper there. Have to adjust that to about the 493, and it doesn't have to obey that area. Really could come down to the next 262, but most likely we get some sort of bounce at 493, wave 4, and then wave 5 would extend down to our lower targets around 480 or so. Okay, so that's what that would look like. And you say, what about the rest of the wave count, right? So maybe we get a bounce from there. There's just no telling. This is weaker, and so you can get a 4-5 and a 4-5 in here as well. And this whole move can be done. Otherwise, we're looking at a whole nother 1, 2, and so you have a 1, 2, 1, 2 setup again. I know it's a lot for Elliott wave. It's all speculation, you guys. All it is trying to give me structure to trade off of in confluence with all the traditional looks, the indicators and things like that. So don't get too caught up in how things count. All right, it really just kind of mimics what structure we're looking at. And that's what trading is. So if price does this, then we do this. All right, so we had a breakdown of these levels. You had a bear flag, back test, and I think this starts to head lower. NVIDIA seems to be relatively stronger, so we'll see how this plays out. Does this go more sideways for a while, or does it break the lows? Is this a 1, 2, 3, 4, and we get wave 5 and maybe an extend wave 5 to start matching the market, and then we finally get a bounce? we'll have to keep an eye out. But most of the meat is off the trade here, so I'm not shorting SMH anymore. We're shorting all the items that really haven't even broke down yet, like Meta. We have a great Tesla short as well, if that continues lower. IWM. And I just did a full video for individual analysis members on YouTube with Tesla. We just updated that. So, all right, back underneath the downtrend line here, had divergence and just broke down from there. I think this is possibly the start of, again, a 1-2 setup, and then wave 3 heads lower. DIA, same thing, 1-2, head lower. Big move on the VIX today. We'll see if this holds. Once again, failed in this triangulation, kind of equilibrium, but holding on to that options expected move. And again, if you just think, probability wise, it's not likely that this fails all the way back down to the options expected move and you see brand new highs in SPY and QQQ and such. This is more likely to hold this options expected move, even come down to close the gap, that's fine, and push back higher. I think that's a more of a probable situation coming into this bearish week here. So just keep an eye on that. Holding on to the 18. If we get back above this 19, I think we're going to start to make new highs. So right now we're making higher lows and lower highs, which is clear to be drawn out. I know the wicks are crazy here, but as an equilibrium, and this is going to break. This is getting tight. All right, that's what I have for you guys. Almost forgot about you guys that wanted some a good look here. SPX, again, that's our major trend line. Held that again. Held the back test of this flag, possible flag. That's another way of looking at this. And so that's why we got this huge buying momentum off of it. And we're going to make new highs, right? That's the bullish scenario. Okay, so our targets to the downside as such, if that happens to be, is that consolidation zone right here. And you see that time frame that I mapped out here? That's what we're looking for. Boom, in this time and price. But trend has to break. Trend's still up, right? Trend is your friend. That's why we hedged. Yes. And again, I usually look on a 4-hour for ES. So let's do that. All right, so kind of flag action too, and I know this can be drawn lower this way. I'll draw a new line. And back tested that flag here and got a push off of it. So I know that that's the way we're looking at it on the other indices. So we'll continue to look at it like that. And if and when this breaks down, then we're probably going to see this 5559. You see we have a nice GAN line there, and that's not my line, so I'm not going to tell you how I got it, and I'll discuss all that. That's Fuse 3. Those guys do a wonderful job with GAN, so I can put a link in the description if you guys want those videos. All right, that's what I got for you. Thank you for watching. Have a wonderful day, and don't forget to like and subscribe. We'll talk to you soon.